Hello everyone, today is the 24th of June 2026. In today's update, I want to begin by reporting what President Donald Trump claimed on Tuesday. He claimed that the day prior on Monday, 19 million barrels of oil left the Strait of Hormuz.
And by the way, yesterday, 19 million barrels of oil flowed out of the Strait of Hormuz, a very beautiful place. That's the most oil in the history of the strait. No, it's never been any, you've never seen anything like that.
Trading algorithms jumped all over this headline, as they always do. But let's double check this claim. The average of barrels exported daily through the Strait of Hormuz before the conflict against Iran started was 20 million barrels a day. So President Trump is claiming everything is back to normal. Let's take a closer look at the number of ships crossing the strait daily. Lately, there is a lot of confusion. Some people report crossings in 24 hours. Others report crossings over multiple days. Some only report what shows up in AIS tracking. Others only report what absent from satellites. Some accounts, especially US government accounts, just report fake news. There are very few trustworthy resources that put all this data together. Please look at this chart from one of the most trustworthy sources, which aggregates all the data. As you can see, traffic in the Strait of Hormuz is nowhere near normal, and it contradicts what President Trump indirectly claimed. Reality has been contradicting claims for quite some time now. Remember in April when Trump said the strait was fully reopened and the Iranians quickly issued public statements to correct him? They said it was open, yes, but subject to their own rules and payment of toll fees, insurance fees, or registration fees. Call it as you wish. Iran is charging for passage differently than before. People can deny it, but this is the reality. Anyone who looks at this chart and claims traffic is normal needs an eye check. With all due respect, they might even need a brain check. Nothing is more obvious and indisputable right now. Traffic is not recovering at all and should not be surprising anyone. The terms of the MOU agreed between Iran and the US are not being respected yet. Iran is waiting for full compliance on the other side. This means honoring commitments, especially ending the war on all fronts. Before we continue with the second topic of today's podcast, if you like my content, don't forget to like the video, subscribe to my channel, and turn on the notifications so you don't miss any of my future updates. Here is the second thing I want to highlight today. I want to clarify what's happening with the oil leaving the Strait of Hormuz. Crude oil that so far has been almost exclusively Iranian crude. All Iranian oil being exported right now is going to China. As a consequence, China's oil imports will pick up sharply to recover the steep drop of the past months and start restocking inventories. This is happening because Chinese teapot refineries hardwired to refine Iranian crude were running at 50% capacity. They couldn't secure supply, and at a certain point, the price became too expensive for them to be profitable. As a consequence, they heavily drew down inventories. I tried to explain this multiple times. Roughly 24 hours ago, I warned again about this on X. The same feedback has now been reported by Reuters, which ran a headline saying, Asia refineries see little room for Iranian oil, leaving China as the key buyer after the US waiver. Here we go. To conclude this section, I want to share a short video which gives you the best idea of what's happening with this Iranian crude supply. The narrative claims it's flooding the market freely, but the opposite is happening. Now, for the last part of today's podcast, I want to show a chart that circulated a lot on social media that reinforces what I said in my last update this weekend. This chart shows that speculative short positions in the oil market are even more extreme now. As you can observe, Brent oil futures contract shorts are above and beyond any previous all-time record. Furthermore, the API just reported its estimate for the upcoming EIA report today, estimates that continue to be great. Besides another record drawdown of almost 10 million barrels from the strategic petroleum reserves, commercial oil inventories are expected to drop by about 1 million barrels, only because a hurricane in the Gulf of Mexico slowed down oil shipment exports last week. The most important thing is that the API expect Cushing inventories dropped last week by roughly another 1 million barrels to 19 million barrels left, a level just 1 billion barrels away from the absolute rock bottom. After that, the whole delivery system and settlement mechanism of WTI futures shuts. Nevertheless, oil trading algorithms continue to do what they do. It's undeniable how the effort to keep the price suppressed is ongoing. However, it's not effective as before, and a strong floor is building up. As I said many times, considering the current setup objectively, if you have good memory of the past, you know what happened in similar circumstances. Whether we were at 10 bottoms or at full tanks, and you put that on top of the extreme speculative positions against oil, it is rational to expect a sudden sharp spike in crude oil prices. It can happen suddenly, at any time, when nobody expects it. It can happen tomorrow, in a week, or in a month, who knows? But we know the buffer is almost depleted. No one knows exactly where everything will crack. Perhaps because we have never been in such an extreme situation before. The only thing we can do is stick with the data, prepare in advance, and wait for the tsunami from the top of a hill, not standing on the beach. This is all for today. But before wrapping up, I want to give you a heads up. I'm working on launching a new content on a new social media platform that will allow me to share financial research and trade ideas targeting a sophisticated and professional audience. This new content will not be free, but I will make sure those who decide to subscribe for a fair monthly fee will get their money's worth. But for the rest, nothing will change on YouTube, on X, or for my X subscribers. Let me be clear. Thanks a lot for listening to my podcast today. I wish everyone a nice day. Bye.